Hello. So today I'm here to talk about banks, banking, payments, and I think that the main thing when it comes to finance, financial services, is trust. Who can we trust? Who can you trust your money with? Who can you trust to make a payment? And in the absence of hyper-Bitcoinization, you have to trust somebody. And even if hyper-Bitcoinization would come to pass, you would have to trust the Bitcoin white paper, you would have to trust Satoshi Nakamoto. So who can you trust? And how can I flip the slides? First, you can trust me. As Holly already presented, I have a couple of years of experience in the space, and I always use the chance to shamelessly promote my podcast, The Pursuit of Scrappiness, so do check it out if you haven't. It's all about all things building businesses. And what I want to talk to you about today is not exactly something that exists today. It's a vision, it's a direction, it's something to think about how it could be as opposed to how it is today. So what do you expect of your bank? And today I'm talking a bit more from the perspective of a business, but these things hold true also for private individuals. So I think the first one is that my money is safe. That's, I think, paramount, right? And as you know, recently events happened with Silicon Valley Bank, with Signature, with Silvergate, that it turned out that your money is not as safe as you thought. Even institutions such as Credit Suisse were under huge pressure to collapse. So, not safe. Your money is not safe. I can get my money whenever I need it. I think it's about speed, about execution, about accessibility. So first of all, it's where is my money kept? And second is how can I access it? Transfers need to be processed fast. This one, I think anyone can relate. I don't need to answer questions. Obviously, I think we are way past that. But you would still love to reminisce on the times where you could send your granddad 50 euros a month and people wouldn't ask you, why are you doing that, right? But that's the world where we live in. And I also have encountered that the expectation is that banking services such as holding money and making payments are literally free. People do have such expectations, and for example, me, for my personal bank account, it's pretty much free. I pay, I don't know, 30 cents a transfer or even less. So I think these are the basic expectations. What is the problem? The problem is that when you think about running a business, there's 1,000 things to worry about, and not all of the entrepreneurs are necessarily finance gurus, and even if they were, they don't really have the time. So small and medium companies, yes, there's deposit guarantee systems in Europe and in the US. They can be relatively safe. In case something happens, they are not going to lose their money in total. However, there are several types of companies for who this is a big question. Cash cows, Apple has more money than most countries in cash. VC-funded startups raise big amounts of money that they're going to be spending over a longer period of time. Or companies that hold funds for their customers, like different kind of platforms online where you can deposit funds to either buy crypto or trade Forex or do some gambling or gaming or whatever. They have a big responsibility towards the clients that their money is safe. So for these kind of companies, the deposit insurance is absolutely useless, because what does 100K give to you when you are holding millions of customer funds or millions of VC money? So these companies need to have not only a very professional treasury function, they need to assume some kind of risk, because at the end of the day, there will be a risk decision taken. And even for the small and medium-sized companies, if you manage to get your money stuck in a bank that goes bust, it can take weeks, months to get to your money when the depositor guarantees are paid out. So everyone has to really worry about it, but they shouldn't. because the business of businessmen is to build the companies, not to worry about treasury, not to worry about money. They need to worry about customers, they need to worry about their employees, and money should be more simple than that. So let's have this a more particular example closer to home. Many of you might be building companies, so something has lost from the slides, but basically a company has just raised 2 million euros seed round. So what do you do with this money? Do you keep it in cash? Do you invest it somewhere? Buy some treasuries, buy some bonds, keep it at a bank that you don't know if you can trust. You have to cover 150,000 payments per month, and you need to make sure that your employees are paid and that your money is safe. You don't have a CFO. You don't have time to analyze the bank balance sheets and financial statements, so what do? Or if, for example, assume that you're a company building in Web3, you might have raised Euro, you might have raised USDT, you might have raised Bitcoin. Obviously, as a Web3 company, you might think that it would be great to keep money in crypto, but crypto is very volatile, and you need to make payments today. So what do you do in this situation? Who do you trust? So is it possible to meet all of the criteria that I described before in one bank or one provider? So that money is safe, you can get to it fast, transactions are processed seamlessly. Okay, this answering questions I just keep for fun, because obviously in traditional finance, that is something that we are all facing with increasingly. And finally, if you want all of these to happen, it cannot be cheap, because if your money is safe, that means nobody's risking with it. If nobody's risking with it, then it's very hard to make money to subsidize your payments. And why do you need to subsidize payments? Well, because they are increasingly expensive. You can see from this slide about just a random example, US AML tools and services market expected to grow 15–16% a year for the next 7–8 years. Why is it so? Well, because the banks need to spend that money on AML, because the regulators are on their necks, and basically this kind of AML culture is reinforcing itself and just becoming bigger and bigger, and payment services are actually the ones that are the most exposed to AML risks, because there are usually different parties involved, one third party sending money to another third party, collections, all kinds of inherent money laundering risks that maybe don't exist in some brokerage or in investment management and other financial services or insurance. So I think that what we need to understand is that payments, even if they are cheap today, cannot remain cheap going forward. And how can we make it safe? What kind of infrastructure can do that? Well, we have the European Central Bank. Yes, you could argue that currencies are failing and have failed many times in history. However, there's this consortium of 30 countries, roughly, give or take, in Europe that build up European Union and the Eurozone a bit smaller than that. And there's a country that is already living this. The example that I have here on the slides is Centralink, the system of the Central Bank of Lithuania that allows not just banks, but also other financial institutions like e-money institutions to open accounts directly at the central bank where they can keep their money in euro cash without taking an additional risk. So basically taking the credit risk of the ECB, which is probably the best risk that you can take in the European Union. So how to solve that? More countries need to pass such legislation and provide such infrastructure that more financial institutions can access and just keep the funds of their customers in euro, in cash. So here I provide you the transactional bank. It exists in some form today. There are some banks in Switzerland that operate this model. The company that I run, Nexpay, is not a bank, but operates on these principles. So basically, you keep the money at a central bank. You don't lend or invest the money. You don't take risk on that money beyond the ECB risk. Well, obviously, you cannot pay interest because you don't take risk. You specialize in payments AML, which is quite complicated, but that allows you to make the as fast as possible and as seamless as possible transactions happen. And finally, well, it all comes at a cost. You have to charge higher fees. So at the end of the day, then the company will have a choice. What do I want to do? Where do I want to put my money? At a traditional bank, yes, I will get cheap transfers. I will get interest on my balances if the favorable interest rate environment persists, but my assets will be always at risk. I will always have to worry about which institution I'm trusting in, what's the credit rating, what kind of people are managing it, what other risks are there. Or if the regulators push for the transactional banks to grow and enable fintech companies to run this model, then, okay, you will not have cheap transfers. It's going to be more expensive. I use the word expensive. Maybe that sounds a bit too scary. Let's say not cheap transfers. And you don't get no interest on that overnight deposit, but you can sleep safe and sound, knowing that your money is not at risk or is at risk of the central bank of the EU or the Fed or whichever market you operate in. And that gives you the edge to actually focus on building the business, providing a good service, making good customer experience, and not fall into the situation where on one day you'll have a thriving business, and on the next day, well, you don't have a business anymore. So companies must have this choice available, and today most companies don't. Most companies just have to keep their money at traditional banks. So yeah, if you like this idea, then call your representative in your governments and tell them pass legislation to make transactional banks a reality today, so that we can keep our money safe. Thank you.